So you want to get rich, but you got to spend money to make money, right? So how do you do it without going broke? Plastic money is everywhere, but should you use credit or debit if you want to build wealth? One can destroy your finances. The other can build your future. In this video, we'll break down the pros and cons and reveal which one actually helps you get rich. We've all heard the stories. People drowning in debt because they couldn't handle credit. But is credit really that bad? If so, why? Are people just making excuses when they can't manage their money? Is debit any better? Which one will help you build wealth? That depends on how you use them. But first, how do they work? Part 1. How do they work? First off, debit cards pull money directly from your bank account. You swipe or tap, money goes ding, gone. It's instant. That's your money, your bank manages it. If you don't have enough money in your account, you're declined. No money, no problem. It's simple, right? Now, credit cards are different. They let you borrow up to a limit, say $5, $10, maybe even $20,000. Then you pay it back later, usually monthly. You get a bill stating what you owe and when it's due. But here's the kicker. You don't use your money. You use the bank's. So you're essentially taking a loan on a monthly basis and paying it back. Key difference: debit uses your money. Credit uses the bank's. Your bank lends you money because they know you probably do and have $10,000 just sitting in your checking account. But you might have an income, a job, a track record showing you can pay it back. Banks lend money they know they'll get back, plus a little extra as interest. Part 2. Benefits of credit cards. Now let's talk benefits. No one. Build your credit score responsibly. Think of your credit score like a financial report card. Lenders use it to see how likely you are to pay back borrowed money. Good score equals more money in better terms. Bad score and lenders think you might not pay back, so they may say no or charge high interest. The best way to build your credit score: get a credit card and use it responsibly. Use it like a debit card for everyday purchases. Gas, groceries, coffee, then pay the balance down to zero every month. By doing this, you show lenders you're trustworthy and gradually build a good credit score. Now 2, earn rewards. Many credit cards offer rewards based on your spending. Some give cash back, say 2% on all purchases. Others offer points or miles for travel or merchandise. Some even offer insurance on certain purchases. For example, rental car insurance. Imagine renting a car and having a small accident. With a credit card that offers rental car insurance, you might be covered. Without it, you'll need to file a claim with your own insurance. This could affect your premiums and credit score. So it's essential to review your credit card benefits to see what you're missing out on. These benefits can save you money and make your everyday purchases more rewarding. Number 3, safer in fraud or disputes. Imagine you're at a restaurant, hand over your credit card, then suddenly your food arrives. Before you can say Jack Robinson, someone snatches your card and disappears. Uh-oh. Right. Well, thanks to the Fair Credit Billing Act, you're only liable for the first $50 of any fraudulent charges. On top of that, most credit cards offer zero liability protection, meaning you won't be responsible for any unauthorized charges. Unlike credit cards, debit cards don't offer this protection. If someone steals your debit card and spends your life savings in a blink, you're out of luck. With a credit card, you can dispute charges, and if it's fraudulent, you won't have to pay. However, you must act quickly and contact your issuer right away. Part 3. Risks of credit cards. Now let's flip the coin and explore the risks of credit cards. No. 1. High interest. Late payments or not paying your entire balance can trigger interest charges. Some cards have teaser rates, low introductory rates, but after a while, boom, the rate jumps. Watch out for cards with rates above 25%. Imagine buying something for $1,000 and owing over $1,200 because of interest. Yikes. To avoid this, pay your balance in full by the due date each month. No. 2. Overspending. Credit cards tempt you to spend more than you would with cash or debit. You swipe, and it's gone. No physical money changes hands. You might buy more than you need or impulse buy. Plus, when statements arrive, you might not connect the dots between your online shopping spree and the bill you received weeks later. Tip: set a monthly limit and stick to it. Treat your credit card like cash. Once it's empty, it's empty. No. 3. Minimum payments. A trap. Here's a scenario. Let's say you buy a dress for $100 with your credit card. The minimum payment due date is in a month. You check your balance. Oops, it's $105. So you just pay the $105, right? Wrong, that's the minimum payment, not the total balance. You'll pay interest and fees on the full amount. It's like paying for the dress with pennies. It's not smart. The average credit card interest rate is around 24. The average person carrying a credit card balance pays about $1,000 a year in interest. Instead, pay the full balance each month to save on interest and fees. Part 4. Advantages of debit cards. Now, let's shift our focus to debit cards and discover their advantages. No one. Spend only what you have. Unlike credit cards, where you can borrow money, debit cards limit you to your available funds. When you swipe or tap, the money comes directly from your bank account. This can help you avoid overspending and impulse purchases because you know exactly how much you have in your account. Number 2, no interest, no bills. With a debit card, you don't have to worry about interest charges or late payments. Simply use the money you have in your account. There are no credit checks or approval processes. You don't even have to worry about minimum payments. It's just your money. Number 3, great if you're still building financial discipline. If you're new to managing your finances, a debit card can be a great starting point. It helps you track your spending and stick to a budget since you can only spend what's in your account. As you gain experience and build financial discipline, you can graduate to a credit card and enjoy the benefits of borrowing and rewards. Part 5. So which is better for getting rich? Think of credit cards as tools, not free cash. Like any tool, they're only helpful when used correctly. Used wisely, they can boost your credit score, give you rewards and flexibility. But if you can't pay it all monthly, stick with debit. Here's the deal. Credit cards can help you build wealth if you respect them. Used wrong, they bury you. Used right, they boost you. If you found this video helpful, give it a thumbs up. And if you're ready to take the next step towards financial success, subscribe to our channel. We've got tons of tips and tricks to help you on your journey. Plus, we release new videos every week. Now drop a comment below. What do you prefer, credit or debit, and why? Let's get a good discussion going. Thanks for tuning in. See you in the next video.